Hello, and welcome back to Financial Market Insights for Traders. I'm your host, Sophia, and today we're diving into the high stakes world of digital options trading, a market where speed, precision, and timing are everything. Unlike traditional trading, where you can ride out fluctuations, digital options give you a binary outcome: win or lose. There's no room for ambiguity. And in such an environment, the quality of your technical analysis becomes the deciding factor between profit and loss. So if you've been relying on gut feeling, overcomplicating your charts, or toggling between a dozen indicators hoping for a signal, you'll want to stick with me. Because in this episode, we're cutting through the noise and laying out the indicators that actually help in digital options trading. Let's start with the foundation: understanding technical analysis for digital options. At its core, technical analysis is about making sense of market psychology through price. We're not looking at GDP numbers, central bank minutes, or earnings reports. Instead, we're observing price action, how traders behave in real time. This is especially useful in digital options where decisions have to be made in seconds or minutes, not weeks. Digital options are unforgiving. If you're wrong, even by one tick or 1 second, you lose the trade. That's why the tools you use matter. Today, I'll walk you through the key indicators that top digital options traders use to stay ahead of the curve. These aren't just tools, they're signals, filters, and confirmations rolled into one. And when used right, they can give you the edge you need in this razor-sharp arena. Support and resistance, the trader's compass. Let's start with the classic: support and resistance. If you're trading without identifying these levels, you're effectively driving blind. These are the psychological battlegrounds where buyers and sellers square off. Support is where price tends to stop falling and bounce. Resistance is where price usually stops rising and reverses. Now, in digital options, the timing is tight, so you need to be laser focused on these zones. A typical setup? Let's say price is nearing a previously respected support level. You start seeing rejection wicks. Those little candles showing buyers are pushing back. That's your window for a call position. Flip the script at resistance, and you've got your setup for a put. But don't stop there. Add confluence. Look for confirmation through candlestick patterns, pin bars, engulfing candles, morning or evening stars. These aren't just patterns, they're trader footprints. Also, don't forget about dynamic support and resistance. Tools like moving averages or Bollinger Bands adapt with price and can act as floating zones of interest. Moving averages, trend radar. Now, speaking of moving averages, these are indispensable, especially for trend following strategies. But not all MAs are created equal. Short-term EMAs, like the 10 or 20 period, are great for spotting immediate trend shifts. Long-term MAs, like the 50 or 200, help you gauge overall momentum. One of the most effective methods in digital options is using a crossover system. For example, when the 10 EMA crosses above the 50 EMA, that's a bullish signal, a cue to look for call setups. The opposite? You're eyeing puts. Some traders also use moving averages as soft support or resistance zones. Price bouncing off the 20 EMA in an uptrend? That might be your reentry point. Now, remember, these signals don't work in a vacuum. They're context dependent, which brings us to volatility. Bollinger Bands, the volatility detector. Bollinger Bands are like sensors for market pressure. When the bands contract, the market is coiling. Think of it like pulling back a rubber band. Eventually, it snaps. When price breaks out of the band after a period of contraction, you're looking at a potential explosive move. In digital options, that's a gold mine. Here's how you use it. If price kisses the upper band and starts reversing with low volume, you might consider a put. If it touches the lower band and shows bullish momentum, a call may be in play. Pro tip: don't trade the middle of the bands. Stick to edges and only take entries when you have confirmation from other indicators like RSI or volume. RSI, the momentum meter. Speaking of RSI, relative strength index, this one's all about momentum. RSI above 70 means overbought. Below 30, oversold. Simple enough, right? But here's where it gets interesting: divergence. If price is making higher highs, but RSI is making lower highs, that's bearish divergence, a warning sign that momentum is fading. Same goes for bullish divergence when price drops, but RSI starts climbing. This is especially useful for catching reversals, prime setups for digital options traders. But again, combine it with support/resistance or price action for accuracy. Real talk, what doesn't work? Let's take a moment to be brutally honest. Not every indicator belongs on your chart. MACD, lagging. Stochastic, useful but often noisy. Ikamoka Cloud, great, but not built for fast expiries. If you overload your chart, you'll suffer from analysis paralysis. In digital options, simplicity is power. 2 to 3 confluence points, that's your sweet spot. And whatever you do, don't chase signals. Let the market come to your zone. Let the trade come to you. Discipline always outperforms prediction. Common mistakes traders make. Let's bullet this out. Trading in the middle of a range, don't do it. Wait for price to reach key levels. Overtrading. The more trades you take, the more likely you are to lose. Pick your shots. Revenge trading. One loss doesn't mean you're off track. Reset and refocus. Trading during high-impact news. Unless you're a veteran, stay out. Spikes are unpredictable. Putting it all together. Let's recap the ideal setup. You've identified a clear support or resistance level. Price is reacting with a reliable candlestick pattern. RSI confirms momentum. Bollinger Bands show volatility. Moving averages confirm trend direction. Now you've got confluence. That's your edge. This isn't gambling. This is calculated decision-making. That's how digital options are won. Final thoughts. Technical analysis isn't magic. It's math and psychology combined. The better you get at reading the market's emotional footprint, the more consistent you become. If you're serious about mastering digital options trading, it's time to get equipped. Head over to crystalballmarkets.com, where you'll find the tools, charts, and resources you need to trade with precision. Their platform is designed for traders like you who demand real-time performance and actionable data. And if you found value in today's episode, subscribe, leave a review, and share this with a trader who needs to hear it. That's it for this episode of Financial Market Insights for Traders. I'm Sophia. Trade smart, stay patient, and I'll catch you in the next one. Until next time, take care.